This is Alistair Begg of Truth for Life, heard daily and weekends on Bible School Radio, 91.3 KDKR, Decatur, Dallas, Fort Worth, and on 91.3 KYJC Commerce.
Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, artificial intelligence looks like it's here to stay. How do you feel about it? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. Well, advances in technology are coming at us at a rapid pace. Artificial intelligence is changing the way we do business. It begs the question, how do you as a consumer feel about it as technology continues to advance? Well, Jennifer White, Senior Director of Banking and Payments Intelligence with J.D. Power, is here today to talk about some interesting conclusions that they've come up with about artificial intelligence. Hey, Jennifer, welcome to Prudent Money.
Hi, Bob. Thanks for having me on the radio show today.
Absolutely. So tell me, I was just reading through the results, and something jumped out at me right from the very beginning. According to J.D. Power, the percentage of U.S. bank customers that are financially healthy remains near the all-time low. Now, not that I'm really surprised at that statistic, but it just seems like most of the reporting and research projects kind of leave that important piece of information out of the reports. How do y'all measure financial health?
Well, we have a proprietary segmentation that we use. As consumers respond to J.D. Power surveys, we let their voices tell us what they view their financial health status as being. So it's a series of questions that you ask consumers around things like, are you able to pay your bills on time? Are you adequately insured medically or otherwise? Are you able to get access to credit when you need it? And the answers to those questions allow us to categorize today's bank customers into 4 financial health segments.
Jennifer, are you there?
Excuse me, I think I swallowed a frog there. Excuse me 1 second.
Well, you're back. Okay.
My goodness.
So go ahead.
So we categorize them into 4 financial health segments, and unfortunately, over time, we see that healthy segment is eroding, predominantly because their long and short-term deposits over the last 3 to 4 years have lowered considerably.
Well, definitely, you can see that through the eyes and the filter of the banking system. Is it y'all's conclusion that artificial intelligence could actually help this through the banking environment?
I don't know that it'll help change a consumer's financial health status, but I think that artificial intelligence can help consumers feel empowered to manage where their finances are today, perhaps make a stronger plan for the future. And then if they're successful at acting against that plan, sure, their financial health status could improve. But I think it's about really using data in a way that helps customers really understand where their finances, what their finances look like today, and make a plan for the future and then track progress.
It's interesting. I was talking to Alyssa before the program, and I said, tell me how you feel about when you call a bank and you can tell it's not a human that answered the phone. And she goes, I immediately want to talk to a human. I want to talk to somebody who can help me. And I actually feel the same way. It's kind of my initial trigger or response as well. And your statistics really do show this, that traditional banking has a long way to go to get to a level of acceptance of artificial intelligence. Talk a little bit about that.
For sure. When a consumer needs a question answered and they have to talk to their bank, the data is very clear that the preference still remains to speak to someone in person. Now, that could be in a branch, it could be on the phone, or it could be online chat with a live representative. But the idea of having a person help them resolve problems or address issues, those are when consumers really lead toward personal solutions. However, there are some applications of machine learning that can help customers perhaps preventively need to contact their bank or make them feel stronger about their financial state before they have to reach out to the bank. And when I say machine learning, I'm talking about not necessarily let's move money from X to Y or let's look at your deposit. It's really more using your personal data to track your spending, to set a budget and then show you when you're actually meeting your budget or missing it, to set up automatic savings rules that shift money into savings for you at the end of, say, every month. Those types of machine learning AI applications consumers are more open to. But, if they need to change their address or they have a problem, they're concerned about something with their account, they want to ask questions about rates, they still prefer a person to do that.
Well, I guess the good news is when looking at the statistics, only 6% not really familiar with it at all. And so that's got to be somewhat encouraging, but the other statistics don't really, they do say, there's a long way to go.
I think so. I think, the challenge is that most people today really don't understand what AI is. AI can range from anything from basically looking at your data and understanding that you have a bill due this month and alerting you to that, all the way through generative AI, which is, when the computer will answer things for you and, will perhaps be a bot that you might interact with when you want to ask a question. And for the most part, because consumers, it's hard to put a definition around what AI is, that makes the majority of us say, I'm not sure if I really like this or not.
Yeah, and I guess that once again, the trigger reaction is how it's all AI, but it's not. It's
right.
An interaction with someone who's not human. I don't want that. Well, that's all AI. But what's interesting is just kind of reading through the report. There's a lot of advances in technology we're not even considering. Talk a little bit about the bank's reaction to your research, and are they in a place where they're saying, let's go, let's push this, let's get the customer base adapted to this, or are they hesitant?
I think if we separate using machine learning or algorithmic AI to do things like having a bot help you find the best rate, or maybe helping you find, helping you determine where you could save some money. Those types of applications of machine learning are pretty welcome, not only by consumers, but are in many cases are already offered by your bank. They're using tools like this to help you avoid fraud, for example, or they might have tools in place in their mobile app that's analyzing your spending. So many of the banks are pretty accepting of those types of machine learning or algorithmic AI applications. It's when you pivot and say, I want generative AI to do the talking for me, that not all banks have gone all in on. In fact, not all banks even have regular chatbots that are, just general point-and-click type chatbots. So that's a little bit more hesitant. Banks are also more hesitant to adopt tools that will automatically make changes for customers. In the investment world, we call those robo-advisors.
Yes.
To do the same thing, by banks, they're a little more hesitant to go that far, where the tool makes a decision for you versus making a recommendation for you. And the banks seem to be aligned with consumer sentiment around the acceptance of tools when you think about it that way.
Yeah, I guess on the other hand, they also got to be looking at it, boy, we could save, I'm assuming this is the case, we could save a lot of money. Or not?
I think they could save money if customers, those that are adopting virtual assistants and chatbots, if they're able to solve customers' needs within that single channel of contact, then that could save them money, because it is more expensive for a bank to take care of you on the phone or in person than it would be digitally. But when it comes to some of these other applications, it's really more about personalizing your experience and helping the customer feel connected to the bank because you're interacting in a value-added way. So again, it has to do with which usage we're really talking about in terms of the application of AI.
Yeah, it's quite an education process. This is Bob Brooks talking to Jennifer White, Senior Director of Banking and Payments Intelligence with J.D. Power. We're talking about artificial intelligence and the adaptation of that into the banking system. Now, did anything jump out at you, Jennifer, when y'all looked at ages of people you're talking to, as far as their attitude towards artificial intelligence? Or maybe, and I don't think that y'all took a look at this, but did y'all take a look at it from a generation standpoint?
We did take a look at both generations and age. It's probably easiest to talk about it with regard to age. Bank customers under the age of 40 are more likely to be familiar with different AI solutions today and are more willing to play with those solutions. That doesn't mean that those that are over 40 are not interested in the tools. Even when you look at familiarity, I think it is, it was still a fairly high proportion. My mind just blanked on the number here, but the fairly high proportion of customers over age 40 who are at least familiar and believe that AI tools, I think it was 24% said, over age 40 said that AI tools could make their lives better, compared to 34% saying the same at under age 40. So it's not that, older customers are disliking of it. They're just not as familiar yet as the younger customers. What's interesting is that both populations share concern about whether AI in financial services really poses an increased security risk.
Right.
And, they're willing, when you ask customers which of the possible machine learning tools they're willing to use, the greatest acceptance rate is for tools that help customers avoid fraud. It's something that a rising proportion of customers are concerned about. And then if you say, well, do you think that, it's a greater risk for fraud or security breaches, both ages are around the same in being worried about that. So I thought that was interesting because I think that tells us that there are certain applications of machine learning that would be more acceptable regardless of age. And prevention of fraud seems to be one of those applications.
I know that y'all probably keep an eye on this, but what's interesting is it seems like it's finally happening to where the consumer is getting concerned about a huge problem that's always been there, that's going on all around them, which is identity theft. And I got to think that the banks would, if you had the perfect setup, you could install the artificial intelligence at different types and different ways within the banking system. But at the end of the day, they've got to be petrified at the possibility of what am I not protecting here, and how could this go wrong?
J.D. Power research data is pretty clear that 35% of U.S. bank customers in the last 12 months experienced some form of financial fraud.
35%.
That number is, and under age 40 actually experiences more fraud than older customers. And it's partially because of their increased use of P2P payment systems, things like Venmo, right, Cash App, Zelle. And so that puts them at a greater risk. And, it's almost 50% of those under 40 have experienced some form of fraud, maybe not identity theft, but some form of fraud in the last 12 months. It's a real fear. And I think because of that, they are willing to accept this idea that machine learning can help keep them safe. But there is a bit of fear of missing out or not knowing what you don't know in the customer base. And so it's imperative that today's banks help guide customers through setting up security settings that take advantage of all the tools and techniques they have available. Whether they name those tools and techniques as AI or not, what's most important is we keep the customer safe.
In what I do for a living, it's interesting because as Wall Street talks about the artificial intelligence stocks and gets people interested in as they watch these stocks go up, I think that and this is a good thing, I think you'd agree, that people are getting more and more interested into what is this AI thing anyway, and that's going to help because it seems like that with looking at the statistics that it's going to be a long journey to get the consumer to where you really need to fully adapt in the artificial intelligence to the banking system.
Agreed. And banking will make these adjustments to the customer experience as necessary. But that doesn't mean that the live person in the branch or on the phone is going away anytime soon, or even by a chat is going away anytime soon. Those will all be options for, I'm sure, quite some time as customers seek to navigate the full suite of needs they have in managing their financial lives.
So, most people are willing to just kind of sit back and watch it play out before becoming a participant. What is the average consumer looking for that would give them that jolt and that feeling of confidence to use AI, do you think?
I think they need it to be easy to connect with their bank and aggregate their financial information into a view that it isn't most customers, on average, believe it or not, have 2.5 different accounts with different banks.
2.5.
So the question becomes, if you're going to use a tool to help manage your spending, set a budget and track progress against it. Maybe set a goal to save for a vacation or, save to put a deposit down on a new car. If you want to do all those types of things, when you have multiple accounts, you need a way to look at it all in one place. And so banks that are using AI tools, again, whether they call them AI tools or not, to help customers easily aggregate that information, that's going to draw them in. Because it's going to allow them to use the tools to really view all of their finances in one place versus each individual bank's unique statement.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. I do appreciate it. Jennifer White is the Senior Director of Banking and Payments Intelligence with J.D. Power, and here to give us some research conclusions off of research they've done in the banking system in adopting artificial intelligence. And what's interesting is that, Jennifer, the technology always seems like it's way ahead of us. So technology can do things that we can't even imagine, but we know that as a consumer base, we're slow to adapt and get to that point to where we can actually put it to use. Do you think that technology has gotten to a point through artificial intelligence to where they could actually start replacing people? I mean, they're that far advanced as far as coming up with answers. They could replace people in a banking system.
Goodness, I'm not a technology expert to know what the furthest tips of AI are able to do. I know what customers want, and I know that banks want to meet customers' needs. And customers are telling J.D. Power that branches are still essential for them, not for everyday banking maybe anymore, not for just making the routine deposit or checking a balance. They recognize even mobile check deposits. They recognize that digital solutions may help them do those tasks quite easily. But there still is a need for a branch to help them evaluate loan options. There's still a need for a branch to provide value-added services. There's still a need for that call center to help them navigate when they have to make a change that they aren't able to, do online. So it does not appear to me that the consumer demand will allow for technology to truly replace, that teller that you're familiar with at your local branch, or even someone who you might call into a call center for, at least in the short run.
Yeah, if I had my way, I think I would like a balance. Because there's something about at least for me, there's still something about walking into a bank and talking to your teller and that relationship that you've got that you can count on. But it'll be interesting. I mean, how long do you think that it takes to see artificial intelligence as somewhat a normal part of our culture?
I think to some degree, there are elements of it that are a normal part of our culture today. Even if we think outside banking, when you get a personalized, targeted ad sent to you through social media, or even if you are, you open up Amazon and they tell you what you maybe should go search for, that really is machine learning using your data in a way to help personalize your experience. That occurs in banking today as well. If you have been searching for mortgages, you're likely to open up, that mobile app and perhaps see an ad for mortgage rates from your bank. So machine learning is happening all around us today. It's this idea of generative AI where you can ask a computer a question and then they give you a human-like answer that seems to be the new frontier. The acceptance of generative AI, I think, has a longer road to follow. But when machine learning is in place and helps make customers' lives easier, makes customers feel more secure, maybe even helps them save time or money when interacting with their bank, those are pretty accepted use cases.
Well, Jennifer, listen, love the work that you guys do over J.D. Power, and especially enjoy having you on the program and hearing what you've come up with. I think this is an exciting field and exciting times to see these technologies be adapted. So thank you so much for coming on the program, Jennifer, and we'll look forward to talking to you next time.
Thank you for the invitation. Hope we can speak again soon.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. I do appreciate it. Yeah, I don't know about you. I can't say that I'm just incredibly well-versed on artificial intelligence. It seems like it's something that's just kind of snuck up on us all. And a lot of people, it's kind of the thing you talk about. But, as you look forward into the future, I think that of course, you see stories of where machine and robots are taking over and this kind of thing. I don't think we look anything like that, but I think there's a good balance maybe that artificial intelligence can enhance the banking experience and enhance customer service and take it to that kind of that next level. Whatever that looks like. The thing that I think I would be very concerned about is the whole potential of identity theft, because that just gives one more set of technologies for hackers to use their skill sets and break into and hack these systems. So I think that's probably the one thing. But when it comes down to identity theft, I think that consumers today, we've kind of been desensitized, if that's how you say that word. I'm not even going to try again. But to the point that we just, there were 60,000 people hacked in a database identity theft scam. I think we kind of just turn a blind eye to it and go on our way. A good example of this, I remember 5 or 6 years ago, I believe it was Home Depot, had something like 65,000 people in their database were hacked. And, that was major news. I was on the front of Yahoo.com, and today it seems like you can get a big corporation hacked. Like, in fact, I don't even think Experian got hacked. I mean, Experian is a credit reporting system. But anyway, more on that later. This is Bob Brooks. If you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.